India's retirement system just got a reality check. In the latest Global Pension Index 2025, India has once again scored a D grade, just 43.8 out of 100, ranking among the world's lowest. The report, released by Mercer and the CFA Institute, compared 52 pension systems covering nearly 65% of the world's population, and India's system trails far behind global best practices. At the top of the table, the Netherlands, Iceland, Denmark, Singapore, and Israel. And at the bottom, India, the Philippines, and Thailand. Well, the difference is massive. The highest ranking nations score above 85, combining strong benefits, sustainable funding, and high system integrity. India's 43.8 puts it firmly in the D category. So what's dragging India down? The report breaks it into three pillars: adequacy, sustainability, and integrity. Let's unpack them. First, adequacy, which is weak. India's pension benefits are too small relative to retirement needs. A huge share of workers are informal and lack any meaningful pension coverage. Second, sustainability, which is poor. With an aging population and fiscal stress, India's system struggles to fund future payouts without reforms. Third is integrity, which is moderate. Governance and transparency have improved, but still trail best performing systems. Regulatory oversight needs to be stronger. The report also calls out India's limited pension coverage, underinvestment, and restricted investment options. For instance, pension funds here can't directly invest in real estate, unlike many global peers. Meanwhile, other nations are racing ahead. Singapore just topped the rankings for the second straight year with a score of 86 out of 100. Its Central Provident Fund covers nearly every worker and offers savings for retirement, healthcare, and housing, all with guaranteed returns and minimal government debt. That's how you build a sustainable system. So, how can India improve its score? According to Mercer and the CFA Institute, 4 key steps could make a difference. First, introduce a minimum income for the poorest elderly. Second, expand pension coverage to informal and gig workers. Third, set a minimum retirement age to preserve savings. And fourth, strengthen regulation and governance for private pension funds. Globally, pension assets grew 10% in 2024, reaching about $63 trillion. But India's progress has barely moved. Its score even slipped slightly from 44 to 43.8 this year, mainly due to new sustainability metrics. Now, in comparison, the US ranks 30th, the UK 12th, Japan 39th, and Australia 7th, while India remains in the bottom cluster. Regionally, Europe dominates the top ranks. Asia Pacific is split, with Singapore and Australia excelling, and India, Thailand, and the Philippines lagging. Well, India's pension system isn't broken, but it's underpowered. For a country with one of the world's largest aging populations, the message is clear. Stronger coverage, better regulation, and sustainable funding aren't optional anymore. Because a D grade today could mean a retirement crisis tomorrow. Follow Business Standard for more such in-depth explainers.
Want access to Business Standard's premium insights? Join our exclusive LinkedIn communities and connect with top voices in the BFSI space on topics that matter to you.